Mr. Bankman-Fried, you are now recognized for 5 minutes to present your oral testimony.
Thank you, Chair Waters, Ranking Member McHenry, and all the members of the committee for having me here today to testify. It's an honor to be here. A little bit about my background first. I grew up in Stanford, California, went to MIT where I majored in physics, and spent 3.5 years as a quantitative trader after college. My goal has been to find ways to have positive impact on the world and to maximize that. And to do so by supporting some really fantastic organizations. In 2017, I felt like it was time to try starting up my own thing. So I, left my job and I moved out west and ultimately got involved in the burgeoning cryptocurrency ecosystem. I spent about a year trading, and in late 2018 began with my co-founders building out FTX. FTX is a global cryptocurrency exchange. We are the second or third largest exchange globally, depending on what metrics you use, processing about $15 billion per day of trading volume on the platform. About a year and a half ago, we started up FTX US, our United States-based and servicing operations. A few points on FTX and the broader cryptocurrency industry. The first is that I think that the industry has the potential to improve a lot of people's lives. There are a lot of ways that this can happen. I think that the payments side of this gets a lot of attention, and rightfully so. Every time that a common consumer goes to a market to purchase goods, they pay multiple % in fees to intermediaries, and that's if they're lucky. When you look globally, trying to send money back to your loved ones at home is extremely difficult. It can cost tens of % in fees. It can take weeks to arrive. It can get embezzled by various third-party scams in the middle. And in general, the global financial ecosystem is not one where sending assets to those who are important to you is easy to do. And this hits the people who are least off the hardest, who have the least access to the financial ecosystem as it exists today. When you look at the number of people who are underranked or unbanked, both in the United States and globally, it's indicative of a system that does not work for everyone. And this is a product of the intermediation involved. It's a product of how the larger institutions have evolved. And it's a product of payments infrastructure that is difficult and clunky enough to use that it just does not work for most people. Cryptocurrencies do provide a potential way to address a number of these issues, making it easier, cheaper, faster, and more equitable for people to do what they need to do to manage their financial lives. A little bit about FTX. We are a cryptocurrency exchange. We have a different structure than the traditional exchanges do, as do many digital asset venues. We provide open and free market data to all of our users. On a traditional venue, you pay tens of millions of dollars per year if you want access to the data of the market that you're expected to be placing orders in. You have minimal access to the same tools and order types that sophisticated trading firms have if you're accessing it through the normal set of intermediaries. On FTX, all of our users have full access to the platform. They have full access to the same sets of tools that institutions do. And they have full access to all of our market data, which we make publicly available for free. This is true whether you're accessing it via API as a sophisticated institution, via our website, or via our mobile app. We've also put a lot of work into the risk controls on our platform. This is true from the financial crime side, where we conduct sophisticated know your customer diligence on all of our users. In order to identify any illicit activity, we monitor via multiple solutions all blockchain transfers into and out of our exchange. It's true of our risk engine, which is a 24/7 risk engine that is unlike the traditional financial ecosystem where risk builds up overnight, where there need to be separate risk models for weekends and overnight activity and holidays, where hours or days can go by with no ability to mitigate risk to the system. We have a transparent system where all of our data all of our public market data is openly available and free, where risk parameters are transparent. And we are already regulated and licensed. We have many licenses globally. Here in the United States, we are regulated by the states under the Money Service Business and Money Transmitting regime, and we are regulated nationally by the CFTC, where we have a DCO, a DCM, a swap execution facility, and other licensure. We strive to conduct all of our business in a transparent and regulated manner. I think that it is coming, and I think it is important, and I think that it is healthy that the industry will be regulated. I think it is also already regulated in a number of ways. I think that there are points that need to be addressed to give oversight of various aspects of the industry that do not have sufficient oversight right now. And I also think that it is important to do so in a reasonable and common sense way that understands the industry. I'm happy to answer any of your questions.
Thank you very much, Madam Chair. In the last year, the digital asset market has exploded from about $500 billion to $3 trillion. And there's still extreme volatility, it seems, in this marketplace. Bitcoin, for example, lost half of its value over 2 days in March. And it rebounded, of course, later on. But there are many problems leading up to the global financial crisis that seem to be manifesting themselves in the market currently. Easy credit via margin investing, lack of transparency, the lack of transparency that I'd like to see, and adequate financial disclosure is not readily available. With the explosive growth in cryptocurrencies, at what point should we become concerned about the possibility of a bubble? At what point should we become concerned about the possibility of a bubble? Mr. Samuel Bankman, if you would please, like to hear from you.
Thank you for the question. One of the really innovative properties of cryptocurrency markets are 24/7 risk monitoring engines. We do not have overnight risk or weekend risk or holiday risk in the same way traditional assets do, which allow risk monitoring and de-risking of positions in real time to help mitigate volatility. We've been operating for a number of years with billions of dollars of open interest. We've never had customer losses, clawbacks, or anything like that, even going through periods of large movements in both directions. We store collateral from our users in a way which is not always done in the traditional financial ecosystem to backstop positions. And the last thing that I'll say is if you look at what precipitated some of the 2008 financial crisis, you saw a number of bilateral, bespoke, non-reported transactions happening between financial counterparties, which then got repackaged and re-leveraged again and again and again, such that no one knew how much risk was in that system until it all fell apart. If you compare that to what happens on FTX or other major cryptocurrency venues today, there's complete transparency about the full open interest. There's complete transparency about the positions that are held. There's a robust, consistent risk framework applied, and we're excited to work with the CFTC on our U.S. licensed and regulated venue to bring a lot of this to U.S. customers as well.
But I want to start with a couple questions for you, Mr. Bankman-Fried. And Ms. Haas mentioned knowing your customer. They avoid getting into the securities transaction business to the best of their ability. That's one of the things they look for. So, Mike, I've got several questions for you, and then one of them will be from completely left field, all right? So get ready for that one. Cryptocurrency market exchanges such as yours are regulated through a patchwork of different state and federal agencies. For instance, some exchanges register as money services business with FinCEN at the federal level and may also receive money transmitter licenses, and you talked a little bit about that in your opening. How is your company registered in this context?
Yeah, thanks for the questions, and looking forward to the left field question at the end. In addition to a bunch of international licenses, in the United States, we are participating in that system you referenced, with the money transmitter and money service businesses licenses. In addition to that, however, we are also licensed by the CFTC. We have a DCO, a DCM, and other licensure from them through FTX US derivatives. And we look forward to continuing to work with them to build out our product suite. We just submitted a 800-page, I believe, proposal to them a few days ago, which we're excited to discuss. And we're also happy to talk with other regulators about potential products in the United States.
All right, well, let's talk about another regulator that may touch on what you do. You talked a little bit about derivatives and the fact that derivatives were, sort of a key component in the failure of the financial markets back in 08 and 09. Is FTX registered with the SEC?
So the core derivatives regulator is the CFTC, and FTX US derivatives is registered with the CFTC. With the SEC, we have begun discussions and are excited to continue discussions there. We do not list securities on our platform as of now, although we would be excited to explore listing digital asset securities in the future under the guidance of the SEC. I will also say briefly that I would be excited to see a unified joint regime with both CFTC and SEC involvement to create sort of harmonious markets regulations between spot derivatives contracts and other things.
All right, now the left field question. So, our role here, there's nothing new under the sun. The technology may change. It may speed things up. It may make it more transparent, but a deal's a deal. Who's taking on the risk? Who's getting rid of the risk? Who's the middleman? So one of the things we hear about blockchain is that it's invulnerable, it's impenetrable, it's something that's super secure. And our responsibility is to make sure that things are generally safe, generally honest, that people aren't swindled. So I also sit on the science committee with Mr. Luchtemeier, and the ranking member was talking about we're at W3, all right? In the science committee, we're doing a lot on quantum computing. And so my question to you is, what threats or benefits to a blockchain system will come from quantum computing?
Well, thank you for the question. In terms of the threats, some cryptographic algorithms are not, at least theoretically, might not be secure under quantum computing. Obviously, this is going to depend on the exact details of what comes. And it's important that, if and when that comes, that, blockchain security algorithms are resistant to that. On the same front, I think it has the potential to create, basically new cryptographic algorithms that are faster, that are more secure, and that are, more efficient from a number of different perspectives. So we'll see what happens there.
The use case for digital assets has partially been that it's this stable store of value. Certainly stable coins solve that. Some have pointed out that Bitcoin, for example, doesn't. And, Mr. Bankman-Fried, one of the ways that people have speculated that the volatility is created in the market isn't by holders of the asset or hodlers, hold on for dear lifers, as has become known in the space, but by the other big group that owns these assets, which are traders. Many of them trade on leverage. And so when you look at leverage, you made a lot of news by saying, we're capping people at 20 times leverage. That's a lot of leverage. But you also pointed out that the average leverage on FTX was around 2x. So could you talk about the importance of leverage in volatility?
Thank you for the question, Congressman. The first thing that I'll say is in cryptocurrencies, in digital assets, as like essentially every other financial asset in the world, more volume trades through futures contracts than through the spot asset. The reason for this is basically it's more economically efficient. It's much more capital efficient. The lack of an immediate delivery requirement on the physical creates a much easier ability for people to hedge exposure, for people to express opinions. And so for all those reasons, I think that they're an important part of the digital asset ecosystem, as they are of every other ecosystem. I'll just briefly say it's important to have robust risk engines that monitor the positions on these assets. We've gone through multiple very large up and down moves and been able to manage positions both times.
I'd like to focus on what I think is the crucial importance of having a secure digital identity for crypto asset transactions. First, regarding controlled anonymity for prevention of criminal activities. And it seems to me that if we wish to prevent crypto assets from being used, for example, for ransomware or other criminal payments, that there is no logical alternative to having all crypto transactions associated with a legally traceable identity, someone who can be extradited if they do something criminal. And which these can be pseudonymous to market participants and to the public, but they must be capable of being de-anonymized pursuant to the action of a court in a trusted jurisdiction. Do any of you disagree with that conclusion? That this is a necessary condition for preventing, for example, ransomware? So let the record show that no one raised objection to that statement. So I think that's very significant. So we have to start planning for a system where in a court, in a suitable jurisdiction, can actually de-anonymize any legitimate crypto asset. Okay, and now that is relevant to crypto assets such as stable coins or CBDCs that have stable valuations but still could be used for criminal activities. But for crypto assets which are speculatively traded, then we also have an additional worry, which is abusive trading practices. In that case, we need to know not only the beneficial owner behind a trade, but there has to be a uniquely identified beneficial owner. There has to be a regulator that can see, oh, this is a wash trade because, even though they look like separate pseudonymous IDs, they are in fact the same person. And so that, historically in trading, that has required to have a regulator that can see the true beneficial owners. We spent a decade trying to get the beneficial owner onto the consolidated audit trail, which probably you're aware of. So do you think that is also a logically necessary condition to prevent wash trades and similar abuses? Yeah, Mr. Bankman-Fried.
Yeah, I'll say I do think that it is, and we conduct know your customer diligence on all of our users so that we do know who the participants are. We're responsive to governmental inquiries about that. We're overseen by the CFTC on that with FTX US derivatives. I also think that this is a powerful argument in favor of having harmonized regulatory and market frameworks, in particular between different asset classes, where if you end up with a different regulatory framework for the market's regulation of Bitcoin derivatives, stablecoin derivatives, Ethereum derivatives, and other assets, you end up making it not just riskier and harder and more annoying for the user to access and more overhead for the industry, but you make it hard to have consistent regulatory oversight of a fractured regime.
No, I agree completely. Look, I have been lurking in the deep weeds for over a decade and trying to get this split inside Congress and between the SEC and CFTC. It just, this is not something anyone would have created, but have you had that discussion with, a number of you expressed enthusiasm for having a single unified national regulator. Have you run that past the Ag Committee? No, look, I know the answer to that. I mean, this is one of the original sins of Congress as it's constituted. And financial services have been suffering from it for a while.
Bankman-Fried, I'd like to start by asking you the first question. FTX US has a derivatives platform and recently bought Ledger X as part of that. Is that correct?
Yes.
Okay, thank you. And that platform is registered with the CFTC. Is that correct?
Yep.
Okay, perfect. So I just want to clarify something, and this isn't to say anybody's doing any wrong, it's just to get the lay of the land. You also have an exchange for Bitcoin and other tokens, but that is not registered with either the CFTC or the SEC. Is that correct?
That's correct. Currently, neither of them are primary markets regulators for spot Bitcoin to USD markets.
Okay, thank you. And I know you're registered as a money transmitter, but that's not the same kind of oversight that we'll see from a federal market regulator. I also sit on the Agriculture Committee, which oversees the CFTC, so a gap like this is especially concerning to me. And the big problem that I see here, from what I understand, is that the CFTC doesn't have regulatory authority for spot trading of commodities, just their derivatives. So that leaves consumers with inconsistent protections, which is a concern that I have. So Mr. Bankman-Fried, you and both Ms. Haas run exchanges, but the investor protections basically can be whatever the companies separately come up with, and they won't necessarily be the same. Is that correct?
I completely agree with your worry. We do, in fact, have much the same investor protections on our spot markets as on our derivatives markets, but I would be very much supportive of a similar regime for spot commodities markets like Bitcoin USD markets as we see for the derivatives markets.
Oh, very good. I like to hear that. Thank you. Okay.
Mr. Bankman-Fried, FTX and FTX US have grown substantially over the past several years. Could you tell us about the economic impact from your perspective that FTX US has in this country?
Yeah, thank you for the question, Congressman. In addition to obviously the impact in terms of the hiring that we're doing and the support of a number of initiatives in the country related to job training and education, we're also hoping that we can help provide financial services to people who have not had easy access to those before. If you think about the number of intermediaries that are involved in a traditional financial transaction, whether it's using a bank or whether it's investing your assets, that's a lot of points that can be very difficult to navigate for a number of people, both in this country and in the world. We aim to be able to provide services to everyone here, all easy to access on a mobile phone, giving inclusive and equitable access to financial markets that have been missing to a number of people.
So obviously, you describe a great many benefits to the U.S. economy. So in your view, how do we keep this innovation happening in the United States?
So I think I'm optimistic that, on the regulatory side, we're not that far from that point, and I think that there are a few clarifications that could go a very long way here. I think that on the market side, having a framework with a single regulatory structure, and it might have multiple regulators involved in it. The CFTC and SEC are both likely to be involved to some extent, but having a single unified framework for futures and spot digital assets could go a long way towards providing the sort of experience that you can offer in a lot of jurisdictions today. I think that giving clarity on the stablecoin side of audit requirements for the reserves, but without sort of squashing innovation by requiring only a very limited number of institutions to be able to issue them, could go a long way on that side. And then the last thing I would say is moving away, hopefully, from a binary distinction of what asset class you are a part of, where one is very much close to a death sentence, and moving towards a structure where we identify the necessary disclosures for certain digital assets related to the issuance, related to the supply, related to anti-fraud measures, so that they can all be part of our financial ecosystem with appropriate disclosures and anti-fraud mechanisms and regulatory oversight would be really valuable.
I want to talk about ransomware. Obviously, we've seen an exponential increase in number of attacks in the last months and years, and it seems to only be getting worse. I know that crypto industry believes it can and currently does play a critical role in preventing illicit finance, including ransomware. Could you, maybe Ms. Haas or Mr. Bankman-Fried, could you describe for us how your firms take an active role, such as working with law enforcement and other market participants when these ransomware attacks occur? I just would like to get a better sense of the role centralized exchanges play with the flow of funds. For example, how do you keep track of tokens, transactions, and wallets? And maybe, including in your explanation, discuss the Colonial Pipeline attack and how the FBI was able to retrieve a substantial portion of the ransomware payments made. Whoever wants to go first.
I guess I'll jump in. Yeah, we work really actively on this. In addition to all of the standard procedures that we have around surveillance of deposits, of withdrawals, and of our customer information, we are responsive to law enforcement inquiries constantly around this. We are helpful whenever we can be, both in terms of information related to FTX and our users, but also, we can extend that out to blockchain histories. Because it is a public ledger, we can trace these assets through, and we say, hey, you should go talk to this place next. This is where it seems like the assets probably ended up. We have assisted in, I think, somewhere north of $10 million of successful seizures so far, in cooperation with law enforcement related to this.
Quick follow-up. Why, if you can get a percentage back, why can't you get all of it back?
If you can get, a percentage of the...
If, again, the Colonial Pipeline attack, 70, 80% of the ransom was retrieved. So what is the difference in the Bitcoin that was successfully retrieved as to the one,
Right.
the one that was not?
We can follow up with specifics on that case, but I'll say in general that any assets which are on our platform, we can retrieve. And often there is, you might see a case where some of the people involved would send assets in one direction, others would send it in another direction, and those others might not be in a trackable way. But anything that is on our platform, we can retrieve.
Sure, thank you. Maybe follow-up question, do you have any tools that we could help put in your toolbox, Congress, legislation that would facilitate greater recovery percentages?
So I think that speed is frankly one of the more important things here. I think like in any investigation, the faster that law enforcement can act on this, the greater the chances of recovery are. And so I think that, we would love to just have standardized open lines with law enforcement where they know exactly how to reach out to us. We can have phone numbers available because, the faster that action can be taken, the greater the odds that the assets are, retrievable.